again. Welcome to today's reaction points for Tuesday, January 20th, 2026. And today provided a lot of fireworks. So we basically had all of the 2026 gains erased and was the worst day for the equity markets since October. Let's take a look at the action. So we were certainly sell-focused today. I'll show you why. We had all of our key levels up here to the upside. So we had midnight open, weekly open, a 3-week close. We had the Euro highs, Asia highs, the monthly open, prior week low, all up above. And we had our key level of 6,900 is 68.99 to be exact. That's the key level that we were working with in our daily trade machine service. So we're focusing on the sell side. Now, as we pushed into, so we're very choppy here, basically for the first hour of the day. A lot of chop going on. As you can see, we're only interested, and it's what keeps us out of the market. We're only interested if we push up into 6,900 or down below the Euro lows here at 68.45. Nobody knew that we would get down this low after being this high. It was one of those days, a push the sell button and kind of walk away type of day. Now, what we do here, what we see is we push into our key level of 68.99. Not only that, we do push into all three midnight open, monthly open, and 3-week close. We didn't get those, the Euro high. We didn't sweep out that Euro high. You can see the buying starting to get tired right around this area. Okay, momentum oscillators turning negative as well. And what we're looking for essentially are these swing lows to be taken out with impulsive action. So we kind of push down once, we try again, push down once, our second time, we try again, and we fail yet again, we push a little bit lower. This time we do take these lows out on a closing basis with imbalance. So now when we pull back up to that key level, we can take very, very low risk shorts here. We're talking risking 2 or 3 points in a fast moving market. And then the market just decides to drop. As far as targets to the downside, remember we're looking initially for just a mechanical 1.5, plus 1.5, plus 2 to get the risk off the trade, get yourself psychological wins on the table. But further below, we're looking at where could we move? We're going to look at this New York Open. Not that that's always going to be your target, but look at the price action, right? Look at the price action here. You know that if price is going to come down here, we're probably going to have a reaction. We don't know if that's going to hold and then bounce higher or just bounce temporarily and then go lower. In this case, it provided a bounce good enough here to take the profits off the table and then look for new setups. And the rest of the day was just a full-on sell mode. Push lower, taking out Euro lows for a brief pause, and then we drift lower into the close, closing pretty much near the lows, just a smidge there off the all-time, or not the all-time lows, the lows of the day there at 68.22, about 10 points higher. If we go over to the gold market, here we had a strong push up here right an hour before the market opened, strong push up. Don't really have any key levels other than the Euro high. It's because everything is just, if you look down, you see our levels because we're at all-time highs. And after the strong push up, everything is sitting down below. So we don't have much to work with as far as downside or as far as upside, other than the Euro highs. Okay, so what we can do is just eliminate all that and work off pure price action. And here we have this push. We're looking for that impulsive move lower. We retrace back into this 5-minute area of resistance or supply, and then get a move back down to the area where we catapulted earlier. So that's pretty much the trade for the day in gold. Other than that, it was just a move up and then sideways action. And then lastly, we'll take a look at the crude market. Similar situation here. Most of our key levels are going to be to the downside. So what we did right here out of the gate, we pushed up, took out the Euro high. We don't have anything. If we look up, we look to the left, we don't have any levels to work with. So we're just trading and banking off pure price action. You see we have 3S code signals, divergent signals as well. We get another 3S code signal. This blue box that is drawn out is a 5-minute supply. So you just drill out to the 5-minute. identify where trend has shifted temporarily, and you're looking for the market to come retest that area, and you look for your qualified sell signal. So we have divergence, we had divergence, and we had 3S code sells, and then we push it back down to this pre-opening range area. So this is a recap of today. Be interesting rest of the week, as we got a lot of headline news to pay attention to and to watch. Should provide some volatility, which of course means opportunity. If you like this video, make sure to give it a thumbs up, give it a like, provide your comments, feedback. Let me know what you'd like to see more of. If you'd like to get more insight into this indicator, this entire methodology, make sure you book a call with me, and we look forward to working with you.